Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday night video, guys. And it's that time of the week again where we cover the top 5 options plays for the upcoming week. Now, keep in mind, guys, every single one of these plays is going to be for short puts, meaning we are going to sell puts as part of the larger form wheel strategy that I've been running on the channel now for about a year and a half publicly. So if you're not familiar with selling puts, guys, it's a very, very easy and passive strategy that does not require a lot of time. It's perfect for beginners, intermediate, or even advanced investors just looking to juice a little bit of returns on the portfolio. Selling puts is extremely simple here, guys. Think of it as a buy limit order that pays you. So let's take, for example, AMD stock. Let's say I wanted to buy 100 shares of AMD stock down here at about 162.50. Well, there's two ways of doing it. Either I can set a buy limit order here that just sits there until it gets filled, or just does absolutely nothing. Or I can write a short put, which literally acts as a buy limit order for 100 shares down here. However, when we are writing short puts, guys, we get paid for those buy limit orders. Take a look here, guys. If we were to write the 162.50 put, meaning if we were to sell this put, we would get about $80 for that. Meaning if ever the stock closes above 162.50 on Friday, well, then we just keep all of the $80 in our pocket. However, if it ends below, we still keep the $80, but we are required to buy 100 shares at the 162.50, which we were pretty much looking to buy there anyways. Very, very easy and passive strategy to run. Really only requires about 15-20 minutes worth of work on a Monday or Tuesday, and then you just let the time decay on the option do the rest for the remainder of the week. Very simple strategy, guys. It's been the one that's allowed me to make over 77% annualized returns in 2023. Just last year publicly on the channel. And this strategy has an extremely high win rate, guys. I'm very happy to say that in the last 4 months that we've been doing these videos every single Sunday night, out of all over 100 plays, we have only ever been assigned 2 plays. One of them was Apple way back here in the lower 170 region, and the rest is history. Could have made a lot of money on those. And the other one was Square. Square we got assigned back here in pretty much the end of the month of May, and the week after provided us a beautiful opportunity to just simply get out. So out of all the plays I've ever recommended, guys, those are the only 2 ones that have ever gotten assigned. So extremely high win rate strategy if we respect the strategy rules. So in today's video, guys, that's what we're going to go over. Number 1, we're going to cover a little bit of the strategy rules behind the put wheel strategy that we're going to try to run here on the channel. Number 2, we're going to go over last week's top 5 options plays, all of them big winners, and this week's top 5 options plays to wrap it up. And I do have a number of bonus plays for you guys as well, so stay tuned for those for the end. So without further ado, guys, let's get right into today's video. The context of this week coming up, guys. Well, obviously we know SPY is in a very gorgeous daily uptrend right now, just looking to maintain that daily uptrend. Even a slight pullback could be met with just a higher low for further trend continuation. Tons of prior all-time high resistance, which is now support around the 5,500 mark on the SPY. So looking very, very strong as a whole. Would not be too nervous leading into this week at all. In terms of your major macro events here, guys, well, we do have a big one here, and that's going to be pretty much on the, well, my apologies, guys. Apparently my data just somehow erased itself as usual. So let's just recap this real quick. Give me a second real quick. Let me be very professional and do this in real time. My bad, guys. The webpage just reset on me right there. So looking for what are we going to have throughout this current week, guys? Well, we do have CPI on the Wednesday session. That is going to be your major market mover of the entire week, in my opinion. The expectation is to come in at about 3.1. Last month was 3.3. Not expecting too many nasty surprises here at all, guys. Should pretty much come in line with the expectation, which is the consensus. A little bit better would obviously be bullish for the markets. Not really expecting anything worse, because if we're just judging off of the PCE inflation report that we got a week and a half ago, that was very, very good and came in line with the expectations. This is going to be our major day throughout the week. That is once again on Thursday. My apologies. I think I said Wednesday. On Thursday. And then on Friday, we do have something big as well. We have all of the bank earnings. Well, the start of banking earnings season. JP Morgan, Wells Fargo, and Citigroup and Bank of New York Mellon is going to be reporting earnings on that Friday session. So it could be a little bit volatile here coming into the end of the week, especially for trying to play financials. So you will see that in my list, not too many financials to be seen. Just trying to avoid some of that volatility. So that's pretty much your recap for the week. Now let's move into some of the strategy rules here, guys. And we're going to go through these very, very briefly. If you haven't seen my video, I made a free 30-minute video on the channel. I will link it in the top right corner above right now, and also down in the video description. It is pretty much a detailed video of how this strategy works, how I pick my stocks, how I pick my strikes, and everything like that. So if you haven't had a chance to check it out, definitely do check it out. Let's just do a quick recap of the rules for now though. So number one rule, guys, and it's number one for a reason: never ever write short puts on a stock that you do not want to own at a strike price you do not want to own it at. If you write puts on a company that you do not want to own and then get assigned the position, it just becomes a hassle to manage the position. You may not have high conviction in the play, and thereafter just managing the loss may be a little bit emotionally cumbersome for most people. So please only write puts on companies that you do not mind owning at the strike price. It is the very most important rule of this entire list, arguably. Number two, we're going to be looking for stocks that are in a monthly uptrend, similar to the SPY right here, monthly uptrend, or at least a long-term range. Long-term range could be something like Square, right? So had a massive downtrend right here, but we've been in a range pretty much for the past, let's call it all intents and purposes, the last 2 years of trading. This would qualify for the long-term range. So I'm looking for either one of the two. Either it has to be at a monthly uptrend or a long-term range to take the trade. Number three, no earnings this week. We always take plays that do not have earnings this week, guys. Earnings can end up with some nasty surprises, and you only have to look so far as potentially Nike and even another stock like Starbucks, right? If you're writing puts coming into earnings, it's a very easy recipe to potentially get destroyed on some of these plays if the market really, really moves against you. Some of these moves, guys, haven't been seen in 15, 20 years for those stocks, so you definitely don't want to get caught on the wrong side of that trade. So if you really want to be safe, just never write any puts on stocks that have earnings this week, and you should pretty much be fine. Number four, we want to be writing at areas of support or breakout retest. Now, I always bring this chart up. So an area of support, let's say Autodesk, right? You see this massive level of support down here around pretty much the 200 to 190 mark. That is a massive support level. So every time I'm going to show puts or show plays on this channel, they're always going to be one of two things: either at a massive support level, or we're going to be targeting a breakout retest trade. The breakout retest is, let's say we break out of the top end of this range right here on the weekly, then retest it as support and then run. This location, aka the retest, is known to be a very high probability trade for at least some continuation. So all the trades that I show on the channel will be one of these two setups. Just adds more probabilities to our favor that our long-term bulls are behind us and will support us at those price levels. Now, the two next ones, guys, go hand in hand. We want to be writing puts at or lower than the expected move. What is the expected move? Well, let's take, for example here, Fortinet, right? So if you don't know what an expected move on a stock is in any given week, it's a probability that Wall Street attributes how much the stock can either go up or down in a given week. So as you can see here, we have Fortinet pulled up on screen. The expected move to the downside is 59.50. So if we were to write puts on Fortinet, guys, we want to be below this expected move. Once again, just adds more probabilities on our side that we do not get assigned. Couple that with the next point, writing on a red or flat day. Well, obviously, guys, if the market opens up red on a Monday and we come down into this expected move, it opens strikes even lower and lower than the expected move. And usually there is some mean reversion midway through the week, which will give us that bounce and allow us to collect all of that juicy premium. So these 2 points, very, very important, guys. You will never see me write short puts on a day that is green. We always want to be doing it on a day that is red or flat. Never chase the market. Let the market come to you. Now, the before last point, we want to be targeting between 0.5 and 0.75% in weekly premium. Essentially what this means, guys, is we're targeting between 25 and 35% ROI on an annualized basis, right? This is on a per week basis. So what this means, if we pull up an options chain, let's say for AMD, I always really want to stay closer to the 0.5% range. Why? Because it provides the best ROI versus the risk assignment. Obviously, there's always a risk of assignment, but if there's always a sweet spot as well, guys, to where we can find, usually it's around the 0.5% rule. That's pretty much been my experience in the last 5-6 years of trading this strategy. It provides the best amount of risk to reward ratio, in my opinion. The risk of being assigned is not that high, but you also generate some decent premium. If you're always writing puts 0.5% per week, that's pretty much 25% annualized, guys. Compounded over time as well throughout the year, right? So very, very strong ROI nonetheless, even if we are being a bit more conservative. How do we derive the 0.5% rule? Very, very simply, guys. Just take half of the strike price in cent increments. So you see here the 162.5, all you have to do is divide that by 2, 162.5 divided by 2, 81.25. That is what you want to see in cent increments at this strike for the trade to be worth it for you. So as you can see, about 78 cents, that's pretty much close enough. This would be a good candidate for the trade. So always be respecting that 0.5% rule, anywhere between 0.5% to 0.75%. 25%, guys. You don't really want to go much higher than that because then we get too close to the stock's actual price right now, and the assignment risk does get a lot higher. So just keep that in mind. And lastly, guys, because this strategy is so passive and so easy to run, you pretty much set up the trades on a Monday or Tuesday morning, 15-20 minutes of trading, no more than that, and then you just let the contracts do the work. Let it expire and collect all of that juicy premium in your pocket. So we want to set a take profit limit order at 90% of the contract's initial value. So let's say we have AMD right here. We write it for 78 cents. You would pretty much put a take profit order, a buy back on this order for about 8 cents, right? Just ensures that if ever you're not at your computer Wednesday or Thursday and the contract goes 90% profit, at least you are able to take your gains and simply move on. And then guys, if ever we get assigned one of these short put contracts, very, very easy to run covered calls against them. That's the second part of the wheel strategy. We get premium getting into the trade, and then to exit the trade, we write covered calls, which generates even more premium. So for covered calls, same rules apply. We want to be looking for 0.5% to 1% in weekly premium for the covered calls to be worth it for us. And we want to be writing at the assigned strike price or one strike higher. Let's say the only time that I will write one strike higher than my assignment price is, let's say we get assigned AMD at 162.50 this week. And let's say for all intents and purposes, the following Monday, it gaps up 165, 166, well above our current, our assigned strike. Then I may be tempted to write covered calls at the 165 instead of my assigned price of 162.50. It's the only time that I will do that and get a little bit greedier for it when we gap up on the following Monday open. So that's pretty much all the rules that we're going to be respecting right now. Now let's jump right into our last week's top 5 trades, guys. And they were pretty much all very, very juicy winners. I showcased a lot of them. I took most of these plays on the channel publicly in front of everybody and was recapping them. If you don't see my daily market recaps, guys, Monday through Friday after the close, and I showcase pretty much all the new trades any day that I make them. So usually about 2-3 portfolio updates throughout the week. So AMD, very, very easy trade. We were looking exactly for that dip last Monday, and the dip was really, really juicy here, guys. Take a look. This is the Monday candle, came all the way down to about 155, 154. And when that happened, we were looking for 155 or better. And I was saying, guys, watch the size of the move. Base your trades off the size of the move. So obviously, when we come into a Monday morning session and we already gap down pretty much at the 155 and we're looking for 155 or better, well, then you need to use a little bit of logic and you need to go even lower, which is what I say every single video. Depending on the size of the move, we adjust our targets while still trying to get our 0.5% rule in premium. So I was able to write the 152.5s last week and got about $1 for them. Happily for us, the stock then moved higher and it was a juicy trade, guys. 100% profit for that trade pretty much. So very, very beautiful entry opportunity on AMD on the Monday morning session. Everything was available. The 152.5s, the 150s, and there was even some premium, guys, at the 147.50s. Such a juicy trade on AMD. So happy that we were able to take that publicly on the channel, and happy for you guys if you were able to take that one as well. The second one, as part of our 3-part semiconductor trade, was ON Semiconductor. We were looking for ON Semiconductor pretty much $66 or better. Unfortunately for us, guys, the trade never really freed up. Here is your Monday morning candle. We were looking for a dip down here into maybe the 67s to open up either the 66 or the 65 strike. Unfortunately for us, guys, it really didn't dip that much. It came down to about $68 and then just rallied thereafter. So there wasn't much of a trade opportunity on ON Semiconductor. The idea was good, targeting the lower end of this big support range on ON, which is pretty much, 65, 64. It's just the market didn't dip enough to give us enough premium to make that trade worthwhile. So this one was a bit of a no trade for me. The third trade, as part of our 3 semiconductor names that we gave last week, was NVIDIA. And NVIDIA, what we're looking for here, guys, we were looking for a dip on the Monday morning session, and the market gave it to us. We were very, very happy about that, guys, because we were looking for strikes pretty much at the 112 all the way down to about 110. I wanted to see a 3-4% dip on NVIDIA, and the market gave it to us first thing Monday morning with AMD. Take a look at this juicy dip all the way down to 119, and that freed up strikes below the area of support that we were looking to protect. We were looking for about the 112. I took this trade myself. I wrote the 112.50s, and literally by that same afternoon, guys, we were out of the trade with 80% profit. So very, very easy trade on NVIDIA. I will be looking for that same trade setup potentially this week as well, which we'll be tackling later on in the channel, but a nice win there as well for myself hopefully everybody else was able to participate too. That was pretty much it for our semiconductor trio. The other stock we were looking for was Visa. I loved Visa in this lower location right here, talking about maybe 260 all the way roughly down to about 255. Huge consolidation, right? Gorgeous monthly uptrend, looking for that monthly higher low right around the 12 EMA on the monthly for the eventual trend continuation expansion. And that's pretty much what we got on the Monday morning session. Take a look at the Monday morning session here, guys. Dipped all the way to 261. We were looking for the 257.50s on Visa, and they were freed up. You actually had two strikes that were available. The 260, which was a bit more aggressive, and the 257.50. Both of them were available. I did not go with one myself because I already have a trade on Visa. However, these were very juicy, guys. Every single one of those trades would have made decent profits. Whether you went with the 260s or the 257.50s, you had an entry opportunity early Monday morning, and thereafter the rest is history. You would have been able to collect all of that juicy premium as pretty much the stock just ran away with it into the end of the week. So once again, very juicy trade on Visa. Now, the other trade we were looking at, guys, was Pepsi. Pepsi, pretty much one of the same reasons, guys. Huge area of support. Look at this support stemming all the way back from the month of October. Not only is it horizontal support, we also have the 200-day moving average, which is this green line right here. And even on the monthly here, guys, monthly 50 EMA, which Pepsi often touches and never really goes below for an extended period of time. So I really like the lower 160 level, and that's exactly where we're looking for here, guys. We were looking for Pepsi at the 162.5 strike, and on Monday morning, I'm happy to say it literally came right down into us. So you would have been able to get some really juicy premium at the 162.5s, which was not a risky trade in my opinion. Even though the stock price was really close to it, we were looking at very large support across the board. That's why I like taking this trade myself. So on Pepsi, guys, another win, because obviously on the Friday session, the stock ending well above that 162.50 or even the 160s if you're a bit more conservative. Another win for us, guys, the stock ending above that location. And I still really like Pepsi in this location right here. If they give us another opportunity for entry, I will be on the watch on this one. So looking very good on that one as well. The before last trade we were looking at was Fortinet. So Fortinet has been one that we've been playing often in the past month and a half of trading. And so what we were looking at on Fortinet, guys, was pretty much I wanted $58 or better. So 58, 57 strikes was going to be the location that I'm targeting, guys. Huge area of weekly support for about the past month and a half. And even the drawdown, if it would have taken us into our huge green box, the one that I've been targeting for pretty much the past 2 years of trading, that provided some very good support in the lower areas. Drawdown maybe maximum down to about 54, 55, which is why I really like the 58, 57 level. I really didn't think that the drawdown risk was that steep. So that being said, guys, we were looking for Fortinet 58, 57, and unfortunately, this is another one where it didn't really open up the trade for us, unfortunately. There was a bit of a trade early on the Monday session, guys. Take a look here is your Monday session, right? So in the later part of the afternoon, it did open up the 58, $50 strike, but not the 58s. I really wanted the 58, just not enough premium on them, unfortunately. And thereafter, the market just ran, so we were not able to find an entry on this, even on the Tuesday morning session, which is this green candle right here. So I still like this trade, guys, but unfortunately, last week just didn't give us enough of a dip to really get that entry here at about $58 to $57, the lower end of the support range. So the idea was good, but the market just didn't dip enough to open up our 0.5% rule in premium across the strikes. So hopefully that was helpful. And then last one, guys, the last one we were looking at was Square, and I did take this one myself. So Square, we were looking for pretty much 62 all the way down to about $61 on strike was the on Square was the desired range that we wanted to go into. It's coming into the last 2 years. Heavy range, guys. This is pretty much your 62 down to about $53 range, right? Trying to target the top end of that one. And this one is pretty much has been a range ever since the beginning of this year back in January. So that's why we wanted to go with the 62, 61s. And on top of that, guys, the valuation of this company at these levels is extremely attractive. We did the valuation at 75, only a 0.55 peg, guys. Company is now profitable. Their growth metrics are very decent. So I figure I should give this company a chance at these price levels. And we did get an opportunity to enter here, guys, on the Monday morning session. This is the opening candle on Monday. So you had a couple hours to actually take this trade. I was able to unlock the $61 strike myself for about 35 cents in premium. And we just rode it all throughout the week, guys. pretty much ending worthless by the next day of trading, or pretty much by the late Tuesday session, right? Very, very strong trade as well. Able to close this one 95+% profit. So very, very easy trade on Square. Hopefully you guys enjoyed that one as well. That's pretty much everything for our last week's top 5 options plays. Now let's jump into the good stuff, this week's top 5. And you'll see that there's a few that are recurring just because they are still in the exact same locations as they were last week. So number one's going to be AMD. AMD, we've been playing this one on the channel so much over the past 2 months of trading, and I do believe that that opportunity should continue. So now AMD, nice daily uptrend. Any consolidation low, we're going to be looking for a daily higher low for the eventual trend continuation above the moving averages, and also finally above this red box, guys. Huge red box of consolidation, prior support, big area of congestion. So it's going to be very tough for the bears to really get back through this zone without much resistance from the bulls, right? That's what we're banking on. So AMD, the expected move for the week is 164.19. So we want to be writing below that, preferably within this red box, just because it's such a high area of congestion. So maybe targeting the 162.5s, even down to about the 160s. So let's go see on AMD, can we find some premium below the expected move of 164.19? Let's have a look. As you can see, we just saw it previously in my example. 162.5 is going to be the strike that I'm looking at. That and the 160s. So far, so good. The 162.50s do offer roughly 0.5%. I would not be opposed to taking this trade right here. However, we have to be mindful about the price action of the stock. Similar to last Monday, if AMD, for every which reason, guys, opens 3-4% negative and already comes into our expected move that same day, are we going to write super close 162.5 or 160 just because those are the strikes that I said in this video? No, we have to use our logic. At that point, if it comes down into 164 very aggressively, we have to go even lower in the strikes, guys. Just look at these strikes and look where the new 0.5% rule is going to be if the stock dips into that area. Most likely it'll probably be maybe 157.50, maybe even 155. So we have to adjust depending on the size of the move down on the Monday session. Hopefully that makes sense. So tentatively, I will be looking for the 162.5s or the 160s if we have a relatively flat open to the week on the Monday and Tuesday session. However, if Monday or Tuesday are very, very red, coming down 164, 163, then obviously we want to be going lower at 157.50. Look for the 0.5% move depending on the size of the move down. That is the key to this strategy. We have to adjust depending on the size of the move that comes in on the Monday or Tuesday session. So hopefully that makes sense for AMD. Now, the next one we're going to be looking at is NVIDIA. NVIDIA, we're going for the exact same trade that I've been taking pretty much the last 3 weeks in a row. So yes, we know that the support area is here, 119 down to about 115, but I want to be getting even lower, guys. I want to be greedy with NVIDIA. I'm going to be targeting, once again, the 112, 111. So the expected move for the week is 120.12. So let's go see, guys, can we find some premium maybe at the 115 mark? We want to be giving ourselves a little bit of wiggle room on NVIDIA just because we know it can move in a very volatile fashion. So let's go take a look at NVIDIA and see what premium can we find below the expected move of 120, closer to 115, preferably, right? So let's take a look. So NVIDIA, you can see around the 115, guys, not much premium. Where is the 0.5% rule coming into play? Roughly around here, 118.50 to 119 is where you get roughly that 60 cents that we're looking for about the 0.5% rule. But that is not good enough. It's a little bit too close for NVIDIA, in my humble opinion. What I'm going to be looking for is if we get a little bit of a dip here, Monday or Tuesday morning, down into maybe 121, 120. Then that will probably free up the 115s down to the 112, depending on the size of the move. So these are the strikes I'll be interested in NVIDIA, guys. 115 down to about 112, as low as we can go while still getting 0.5% for our stock. Keep in mind, we want to be getting at least 55 to 60 cents on these strike ranges between the 112 and 115 for that trade to be worth it for us. So that is the play that I'll be targeting on NVIDIA. I really want to get below this area right here. Just in the event we have a very volatile move down, at least we can get some mean reversion and have a little bit of a bounce intra-week, right? So that is what going to be the one that I'm looking for on NVIDIA specifically. Now, stock number 2, guys, is once again going to be Visa. So Visa, although we are not near the 260 that we were as a part of, early last week, it still represents a very, very juicy trade in my opinion. Huge bounce by the bulls. What are they trying to do? We are trying to get the daily trend back. So in the event this move tops out and we get even we come down a little bit trying to set that daily higher low for the daily trend expansion, I want to be making a play. If ever we retrace a little bit, I want to be making a play down here, guys, below the expected move. The expected move for Visa at this point is about 266.24. So let's have a look. Can we find some premium on Visa below the expected move of that 266 roughly, right? So Visa trades in $2.50 increments. You can see it right here, right? There's no 261s, no 262s. It's $2.50 increments. So the one that's going to be the closest to the expected move, slightly below it, you can see right here also the 200-day moving average right here at 265. This is the exact strike that I'm looking for here, guys, on Visa. Looking for maybe the 265s. As you can see now, however, not enough premium on that trade just yet, so we have to be patient. You need to see at least $1.30, maybe $1.20 for the trade to be worth it here, but you can see we're not even getting that on the 267.5s. So Visa definitely needs to have a little bit of a pullback on the Monday morning session. If we pull back, let's say, down into 269, 268, that will probably free up the 267.5s, but maybe not the 265. So if I want to be aggressive on this one here, guys, I may just take the 267.5s, but that's just me. I'm a little bit more aggressive on Visa just because it's such a solid company, and I know that the trend is our friend, and we are looking to potentially recapture some of these gains that we've lost over the last 4 months of trading. So I would not be opposed to taking the 267.50s. But if you're a little bit more conservative, you may want to wait Monday and Tuesday. If it comes down even lower into the 267 range, that will probably free up the 265s, guys. Once again, looking for about $1.20 for that to be worth it for you. So that's just a nice little trade idea on Visa. Nice little bottoming out of this area right here. And it's really following MasterCard's price action as well. Very solid support for these companies, right? Just looking for the eventual monthly higher lows for further trend continuation on both Visa and MasterCard. That's why I don't mind playing this one a little bit more aggressive, just because it's such a solid company on such a beautiful dip. So hopefully that's helpful for Visa. Now, the next trade on the list, guys, we're going to be looking at this one, Toll Brothers. So one of our home builders, very strong company. And this one is really not affected by any glimpse of a recession. Most of their clients are higher net worth clients. They are a luxury home builder, and their past quarterly earnings have been very beautiful this entire year, guys. They keep saying the same thing. Demand is still strong for the company because of the client base that they target. Now, that being said here, guys, we're coming down into a very nice area of support around the 106. Yes, it is currently a bit of a weekly downtrend for the stock right now. Big momentum to the downside, but we are coming into potentially daily oversold conditions, coming into the 200-day moving average right there, which you can see has been a very strong moving average for Toll Brothers in the past almost year and a half worth of trading. On the longer term time frames, we were just looking for the monthly higher low for further trend continuation, and the monthly 12 EMA is also sitting right there at about the 103 mark. So guys, the expected move for Toll Brothers on the week is about 106.04. So can we find some premium on Toll Brothers below that 106.04 mark? Let's have a look together, shall we? So moving on to Toll Brothers, 106, you can see, guys, it's only paying about 55 cents, but that's okay. That is literally your 0.5% rule, so I would not be opposed to taking the 106s. However, because the momentum is to the downside, if we do get a bit more continuation Monday and Tuesday morning, we want to be getting as low as possible in this support box that we can be, right? Think maybe 104, 103, as low as possible, in line with this maybe 50 EMA on the weekly, which is around the 103. So I would be looking for a dip, guys. If Toll Brothers dips Monday or Tuesday down here into maybe 106 into our expected move, that is most likely going to free up the 104s, even the 103s. These are the two strikes that I'm most keen on playing for Toll Brothers this week. But once again, as I said, guys, we need that dip to come into a little bit of continuation for it to be worth our while, to really get deeper and deeper into this large support zone where we can expect a nice reaction from the bulls. So that's pretty much the trade that I'm going to be looking for on Toll Brothers. Beautiful company, decent valuation, and the fundamentals of the business are very strong. Now, the next company we're going to be looking at is once again a recurring pair that we've been trading on the channel for a couple months in a row at this point. And once again, it is Square. Square trying to embark on this beautiful new daily uptrend, and also really trying to push on the weekly as well. May encounter a little bit of resistance overhead, but that's okay, guys. So the move that we're going to be looking for on Square is down below here. The expected move is about 63.24 on Square, in line with our big area of support down in this lower channel right down here. So can we find some premium on Square in the 63 range? Let's go have a look together, shall we? So pulling up Square, can we find something $63 or better? As you can see, guys, On the $63 strike, we have about 36 cents in premium, which does respect our 0.5% rule for the stock. So I will be targeting one of these two strikes, guys, 63 or 62, depending on the size of the move. Obviously, if Square has a very bad day on Monday and comes back into the 64, then that may even free up better strikes. We may even be able to get the 61s. We want to go as low as possible on this options chain while still getting our 0.5% rule. But at a quick glance, guys, $63, $62, very juicy support for the stock. I would not be opposed to being assigned the stock there because this one is potentially due for a little bit of a rally, in my opinion, especially due to the how cheap the stock is pretty much. So could be a very interesting trade once again to pick up some Square down here. Let me know if you guys like that one as well. Very, very nice trade. We've made a lot of money on this one over the past month and a half worth of trading. So that is the thesis and trade analysis for the potential play on Square. Now, the last two that I have for you guys is a little bit of a mix. It really depends which is your guys' preference. But these two companies that I'm about to show you are extremely strong. Number one, we have Wynn Resorts. Wynn Resorts, guys, one of my favorite venues in Las Vegas. I was literally there about 2 weeks ago. The place was booming. The clients absolutely love it. People had nothing but good things to say about it. It was literally booming, guys. And they do cater to a more luxury clientele as well, right? So really a stock that is kind of recession proof. The only tiny red flag about this company is that a lot of the revenue does come from their location in Macau, which is off the coast of China. And you guys know China's been in a little bit of an economic recession right now. So the numbers at that casino have been good, but they haven't been as booming as they have been at their locations in Boston and Las Vegas. So that's the one thing that's holding them back a little bit. However, this stock is coming into a very, very juicy area of support nonetheless here, guys. We're talking about pretty much the last 4 years almost at this point, right, of huge support for the stock. The fundamentals of the stock are doing very, very well. The business is doing well as well, which is why I think it's a decent trade opportunity. We're also coming into daily oversold conditions, so could maybe be expecting a little bit of a bounce soon. That being said, we're targeting the lower area down here, guys, about $84, $83 if we can find it, right? So the expected move on Wynn for the week is about 84, 86, so right under $85. Can we find any premium on Wynn below that $85 mark? Let's go have a look. So Wynn, take a look here, guys. You can see that unfortunately, only at the $85 mark do we have the required premium of roughly 42, 43 cents. It is paying somewhat decently. However, if we do get a continued dip on the Monday morning session on Wynn, Monday or Tuesday, bringing us down below the expected move, maybe into the high 84s, that will definitely free up maybe even the 83s, guys. So I'm going to be looking for one of these two strikes, 84 or 83. Obviously, guys, if Wynn has a minus 2% day on the Monday morning session and plunges us down into the 83s right away, well, then we want to be going even deeper in this location. Think 81, think $80 strike. So it's all about adjusting depending on the size of the move on the Monday morning. At a first glance, however, I really like these 84s, 83s, but if we get a more significant drop on the Monday or Tuesday session, then I may be going even lower. Think $82, $81, as deep as we can go in this big, big, big pocket of support. That is pretty much everything for Wynn. Now, the other trade, depending if you don't like Wynn as a company, is Fortinet. This one, extremely solid cybersecurity play. Nothing bad to say about the company. Profitability is extremely good. EPS and revenue expansion is extremely good. And the valuation at these levels is also not that bad, guys. About a 1.73 peg, which is not so bad. Really one of the cheaper plays in cybersecurity right now. Fortinet, it really has a very nice shelf of support right down here. And as I was saying previously, guys, even if we do draw down a little bit, maximum, in my opinion, is maybe down to about $55, $53. So not that far off the prices that we're looking for at about 58. So the one we're going to be looking for on Fortinet is going to be right around the right below the expected move, looking for maybe $59, $58, as low as we can get for this whole support area that was pretty much happening since the month of May, right? So looking very good. The expected move down here is about 59.5. So let's see, can we find any premium below 59.5 on Fortinet? Let's have a look. So to pulling up Fortinet on deck right now, you can see right here that unfortunately, guys, the 58s, there's really not that much there. Even the 59s, there's not that much there. We would need to see about 30 cents for this to make sense, but there unfortunately is not enough premium. So number one thing we need to look at on Fortinet is we need a dip, guys, right? Absolutely need a dip because so far the only premium available is at the 60s. I really want to be lower than that. 59, 58, as low as possible, closer to the bottom end of the support range, trying to be a little bit greedy with it, right? So if ever we get a bit of a dip here on the Monday morning session, bringing us back down, maybe into the low 60s, even high 59s, that will definitely free up one of these two, 59 or 58. Obviously, if Fortinet has a very bad day on Monday, 3% to the downside, bringing us down 59 right away, well, then we have to go even lower, guys, right? Then we might be targeting the 58s or the 57s as low as we can go while still getting our 0.5% rule. So one of these three strikes, guys, 59, 58, 57, depending on the size of the move that we could get down on a Monday or Tuesday session. So that's pretty much everything for the top 5 options plays of the week. Those are the safer plays. Now, let me give you guys a bunch of bonus plays that I always have on the back burner. And you guys know me, I always have a ton of bonus plays, but I just keep them at the end for a bonus just because it's not that they're riskier, guys, but the top 5, I always try to take the more solid ones that give a decent margin of error as well. So if ever we get assigned, at least we have a good margin of error, and at least we can be insured for a nice little bounce, right? These plays that I'm about to pull up, yes, they are a little bit more risky, but they're very, very solid plays nonetheless. I always have them on the back burner in the event that they provide us an opportunity. So number 1 is going to be Google here, guys. Google really just looking for a pullback, right? Impossible for me to chase Google up here and write the 190s, right? But I always have this one on my list. If we do get a little bit of a pullback here early on in the week, maybe back down to maybe 187, 186, I'll probably be targeting the 184, 185s. It's going to be tight. It is trying to kind of chase the market to the upside, but Google is such a strong name that if we do get a nice pullback here in the 187s, I'm going to be targeting our most recent daily high or low around the 184, 183 mark if it opens up. Now, the other one is Amazon. Amazon, same thing, breaking through the all-time highs. So I don't really want to chase, but if ever Amazon provides me an opportunity, let's say we dip down here into maybe the 194, I'll be looking, guys, maybe 192. I always have this one on the back burner just because it's so solid. I'm not going to be so patient to wait for the 190, which is your larger prior resistance, which is now support. I may get a little bit cheeky and right just above that, guys. Maybe the 192, 192.50s, just below the most recent daily high or lows right here. Could be a decent trade opportunity on Amazon, but still a little bit risky just because it has ran a lot above the all-time highs. The true trade would be waiting for a retest of the 189, but it may just not happen before we get another leg higher. So that's everything for Amazon. Another trade I'll be looking for, guys, is Enphase. So one of your solar inverter plays, decent fundamentals, but obviously the sector is just out of favor right now because of high interest rates. The reason I like Enphase, guys, is just the volatility, right? If we get a nice 3-4% down day on the Monday, bringing us down to maybe the 93, 92s, usually Enphase, you have a large margin of error to get the 0.5% rule. Usually you can write strikes 5, 6, 7% below the stock, and you should be pretty safe, right? So if we ever get a big dip on Enphase Monday morning, bringing us down maybe 92, 93, I'll be maybe looking for the mid 80s, 85, 84, as low as I can get while still getting 0.5%. I've been doing that on Enphase the last couple of weeks, and so far so good, but definitely a little bit of a more risky play, right? And then the next one, guys, always have this one on the back burner too, Chipotle. Chipotle in this region right here after the split, $61 down to about $57. If we get some continued drawdown on Chipotle down into maybe the 59s, high 59s, right? Maybe even 60, then I'll be looking to write any one of these strikes, 58, 58, 50, 57, as low as I can get while still getting 0.5%. But Chipotle, you really need a big move down on a Monday or a Tuesday because it's not that volatile. So you really need to be almost on top of the stock price to get juicy premium. But this is one location that I always keep an eye out for. Now, another one is going to be SMCI. SMCI, probably it's going to be out of reach for a lot of people just looking to place short puts because one short put for 100 shares, guys, would be pretty much, $76,000, $75,000, which is a lot of money to put up for anybody. What I may be doing, however, is some put credit spreads. So if we do pull down here on SMCI down into maybe the, let's call it 780, right? If we can come down here, guys, 800 down to 780, I'll probably be looking to write some put credit spreads, maybe looking 3-4 weeks out, and probably using the following strikes, guys. Probably 760 versus the 755s. That's a nice little put credit spread range in line with our big prior area of support, giving it probably 3-4 weeks of time, just in the event that we do consolidate in this area a bit further. At least we have some time to get that rebound. That's going to be a put credit spread put credit spread play that I'm looking for, guys. 765, 760 range, trying to keep a $5 width on those strikes. Then another one, guys, that I'm looking out for is going to be Baba. So Baba, I really love this stock here, guys, coming down in the prior range of juicy support, $72, $71. If you get a little bit of a dip on Baba early on in Monday morning or Tuesday morning, that's exactly what I'll be looking for. $72, $71, $70, as low as I can get, depending on what the premium is provided. I think it's a juicy trade opportunity, guys, just off the sheer support that they have down there. Amazing fundamentals for the company. Yes, their relief story has been a bit slow, but it's fine. A little bit more of a risky play for all of those out there looking to take this one, but I'm still a very big fan of playing Baba in these lower levels. So that's just another play I'm looking out for. Another play I'm looking out for, guys, is Intel. Intel finally starting to break out of the channel right here. So in the event we get a retest of the range that we just broke out of, right? 31.40. If we get a little bit of a retest down here, maybe looking for the $31 puts, maybe the 30.5s, right? Anything in this lower support range, which has been pretty much support ever since the early part of the month of April, looking like a decent little area to make a little bit of a gamble on Intel's recovery story as well. Then another play that I'm maybe going to be looking for, if the opportunity presents itself, is JP Morgan. But be very, very, very careful with this one. They have earnings on Friday. I will be looking to close this trade before the Friday session. So pretty much Thursday afternoon at the latest. Looking for JP Morgan to continue its descent into this location right here. If I can get it around 201, 200, that will probably free up the 195 strike. There's some decent premium on these because it's an earnings week, but be very, very careful as well. I will be closing this one before the Friday session. Once again, looking for maybe 195 on a dip back down to about 200, 195. Very, very strong prior location for JP Morgan. And lastly, one that I've been keeping on my watch list a bit more carefully is Vertiv Holdings, right? So this company, if you don't know what they do, they essentially manufacture a bunch of things for GPU racks, right? So the server racks, the same ones that SMCI makes, well, these guys provide power solutions for those racks and also cooling solutions for those racks. Extremely strong company in terms of fundamentals. Great profitability in terms of profit margins. They're finally profit margin positive. EPS and revenue growth is extremely strong for the company as well. The PEG ratio is not too bad at about 1.32 at the $85 mark. So that's around where I'm targeting. If we get a further dip on Vertiv Holdings, maybe down 88, 87, I'll be looking to make some trades 85 all the way down to $80 in this whole prior support range, looking like a very, very solid company, at least since the month of April. Just looking to establish a bit of weekly support, maybe before another leg higher, and the monthly can definitely support some further trend continuation. So looking very good on Vertiv. The only reason why I say it's risky, guys, is because as all the other semiconductors, it's come up a lot. And this support area, even though it is one of the more solid ones, it's definitely not as solid as if we would consolidate for a long amount of time, something like SMCI, right? Where it really came down and established a larger form base of support down here. So those are pretty much all of the bonus plays and the top 5 options plays. That's pretty much everything I had for you guys this week. Hopefully you guys enjoyed it. If you did, consider dropping a like on the video. Would appreciate it for the growth of the channel. Consider subscribing to the channel as well. We do these videos every single Sunday in preparation for the upcoming week. And then throughout the week, every day after the close, we do our daily market recaps. So hopefully I see you back in one of those videos with us, guys. And lastly, if you have any questions at all on the strategy, on my stock picks, anything you want, leave it down below in the comments and I'll be happy to answer you. Even if you want a second opinion on an options play you're considering, leave it down below in the comments, guys, and I'll get back to you within 24 hours. Take care. That's all I had. I'll see you soon. Happy trading and peace.